Hello, everyone, and welcome to today's webinar, The Winning Formula to Protect and Grow Annual Recurring Revenue, brought to you by Technology and Services Industry Association and sponsored by iasset.com. My name is Vanessa Lucero, and I'll be your moderator for today. Before we get started, I'd like to go over a few housekeeping items. Today's webinar will be recorded. A link to the recording of today's presentation will be sent to you within 24 hours via email. Audio will be delivered via streaming. All attendees will be in a listen-only mode, and your webinar controls, including volume, are found in the toolbar at the bottom of the webinar player. We encourage your comments and questions. If you think of a question for the presenters at any point, please submit through the Ask a Question box on the top left corner of the webinar player, and we will open it up for a verbal Q&A portion at the end of today's session. Lastly, feel free to enlarge the slides to full screen at any time by selecting one of the full screen button options, which are located on the top right corner of the slide player. I would now like to introduce our presenters today. John Ragsdale, Distinguished Researcher and Vice President of Technology Ecosystems for TSIA, and Scott Frew, Chief Executive Officer and founder of iasset.com. As with all of our TSIA webinars, we do have a lot of exciting content to cover in the next 45 minutes, so let's jump right in and get started. John, over to you.
Thank you, Vanessa. Hello, everyone, and welcome to today's webinar. I think with some potential economic doom and gloom on the horizon, there's a lot more interest in revenue, our role in revenue, how we can lower the cost of generating revenue, and definitely how to create just more profitable revenue in the long term. And I'm very pleased to have Scott Frew with us today. Not only as a CEO does he have a lot to say about this topic, but his company provides technology that can automate and streamline a lot of the subscription revenue model. So we're going to be talking today about some of the challenges and opportunities in automating renewals, expand selling, etc. So I know everybody out there has seen our fish model slide we've been using for, I think, about a decade now. But obviously the point is for companies who are shifting from a legacy on-premise hardware or software company to become a cloud company, there's a tremendous amount of change and transformation required. And it took a leap of faith in the early days for companies who are used to closing these multi-million-dollar deals up front to start selling subscriptions, which is a lot less upfront, but much more upside in the long term. And that means that the focus has to go from 100% attention on that initial sale to a lot more attention on how are we renewing deals, how are we identifying opportunities for expand selling. And if we look at some of the data from our benchmark on annual dollar retention, you can see that the industry average is about 88%, industry median 90%, pace setters 96%. So the numbers are pretty good, but these are industry averages, and there's absolutely companies who wish they had numbers as strong as this. So Scott, first of all, welcome to the webinar. Very pleased to have you back.
Thank you, John.
To get us started, could you give us just a definition of ARR for the uninitiated and talk about why this acronym has become such a critical talking point for Wall Street?
So first up, annual recurring revenue is simply the amount of revenue a company can expect or reasonably expect based on existing contracts that they have out there in the field. Ever since Adobe, which really were the leader in this space, transitioned overnight from perpetual licensing to consumption or subscription, it has changed the way people are really regarding that particular revenue stream. And for investors out there in particular, the beauty of ARR is that they can have a predictable income in the future state, a lot more predictable than relying heavily on net new sort of larger deals coming through the door in the future.
So it's not really a new concept, but from my perspective, just in maybe the last 6 months, I've seen that companies are emphasizing this a lot more in their quarterly reports and annual reports, and the Wall Street reports that are coming out are talking about this, where, this time last year, they still seem to be primarily emphasizing new deals, net new revenue. What do you think is forcing them to finally focus on this? Because, it's been around for a while. A lot of pure born in the cloud companies like yourselves who have been focusing on this from the beginning.
I think ultimately it's because of the technologies moving that way anyway. I mean, if you look at the classic telco type companies, they've been operating on this model for a long time now, and it's just getting the investors to transition to the predictability of future income based on this recurring revenue. I would argue that Wall Street still has somewhat a fascination of net new logos and deals, but they are in that transition process of moving towards this recurring revenue piece and understanding that renewals of these contracts really, or churn, if you like, are really where companies are starting to focus their attention, and they're retooling their internal systems as well as shifting people into that sort of customer success type mode, if you like.
Yeah, absolutely. Well, I appreciate you kind of doing that level set to start us off, but our topic today is the winning formula to protect and grow ARR, and iasset's platform enables automated management of customer retention, expansion, aftermarket sales, and I want to drill into some components of those in more detail in just a minute, but at a high level, how can vendors automate their revenue growth and protection?
Well, to start with, John, when we engage with manufacturers out there, we tend to find that they have data. They have data in silos around the organization. It may not have been collected for the purposes of recurring revenue, expansion, or lifecycle sort of management. So the first part is finding out where that data resides. We've just gone through with another US company. It took them a good month to find just their serial number set, which was sitting in a random system. Now, bring all that together. We often have to get manufacturers to find more channel point of sales data because a lot of them aren't trapping the through sales from either distributors or resellers. Then the next step is to detail their rules base around what the rules of that product life cycle for their product set are going to be. Deploy, obviously, our platform, or there are many other ways to attack it, but they're usually piecemeal. Connect it to the ERP. I can't stress this strongly enough. If you're going to go into a mode of operation where it's high speed, a lot lower value deals, you can't have people getting in the way of these data flows. So typically you would connect this platform to their ERP system so that it can tell ERP when and what to bill, and ERP can tell the platform when it's complete so that the life cycle can be managed moving forward in an automated fashion. Now, once you've started that sort of cadence, you're starting to collect install-based data, and again, install-based selling is a newish term for a lot of people, but it's about mining your install base across the globe, looking for opportunities to generate unsolicited proposals and quotes, again, in an automated fashion, which previously was a challenge for many companies because they would simply use sort of marketing broadcasts and it would not necessarily hit the right audience, whereas now you have all the data on who owns what, where it is, when it's going to expire. So you can mine that for these expansion and upgrade opportunities. And as an example, during COVID, one of our customers made almost as much revenue out of mining their install base as their renewals base at that time.
Wow. Well, that's great to hear. Again, I think that's something that a lot of companies aspire to, but they're not exactly sure what the dotted line is to get there. Sure. TSIA recently published a new book, Digital Hesitation, and it talks about some of the challenges companies have had in a digital transformation, and automating the entire land, expand, adopt, renew process is a huge piece. of that digital transformation. And, you know, when I talk to companies, I hear a lot of challenges like too much siloed data, departments aren't collaborating, just really a lot of cultural change that is difficult for companies to swallow. Could you highlight some of the biggest obstacles you've seen to automation?
I think first of all, many of us are busy. So a lot of the resistance we get to change is, as someone quoted only yesterday, we're too thin on the ground to actually make the change, which is akin to saying we're too busy to change. But I think everyone's focused on their quarterly numbers and getting a strategic view of the business rather than just being caught in this quarterly trap. The other thing that many business side of organisations are challenged with is IT think they can build it. And historically, we've had many organisations that keep coming back because IT really have a lot of other issues to deal with. And building a platform to do this sort of process is not it's not native for them. So really, it's getting IT's resources to get on board, and that usually means a C-level person understanding the opportunity and wanting to evolve the organisation to get the drudgery of the process out of the way, so that people can get on with the more creative side of the business.
So iasset provides a best-of-breed platform for this, but clearly digital transformation is about people, process, and technology. How do you see your company helping your customers overcome these challenges to succeed?
Look, I think, John, the easiest way to put this is getting the people that are actually facing a lot of these problems in a room together and explaining where the opportunity is. It can be a challenge for a larger organisation that haven't got their arms around that data to actually move forward. Now, with the TSIA's layer strategy, we have slightly different view on that. We have LIPS, which is land, invest, protect, surrender. So land is automate the entire quoting process for net new or expand or extend campaigns. Invest is mining that install base that you've now collected across the globe. Protect, so we don't use the word renew, we use the word protect, because there are some manufacturers that may sell a 3-year subscription contract. At 3 years, they don't want to have a renewal conversation, they want to have an upgrade conversation. So it may not be defaulting to renewal. Of course, if you're say a virus company with very high frequency, low value renewals, then you completely automate that piece. And then the last, surrender. A lot of manufacturers communicate end of life or end of support for their products, but it gets lost in the channel. The distributors don't pass it through, the resellers don't engage, and the end users have got no idea that things have gone end of life. So it's really getting your head around that sort of layer or lip strategy in our world to cover not only your customer base, but the channels that are delivering that solution, and making sure that they're all engaged in this process as an ecosystem rather than just downstream partners that you're trying to sell product to. Connecting all those silos of data, which I've mentioned before. We have technology, technology for APIs has been around a long time now. It's just a matter of deploying them. And I would advocate, if you have a channel in front of your business, it's to bring them along for the ride. A lot of companies have failed in the past by just simply firing up portals. And if you take an empathetic view of that channel, they might already be dealing with 20 or 30 portals from different manufacturers they're dealing with, and the last thing they need is another portal. So it's how do you engage with that channel, with the data, in a way that channel can consume it without literally pushing the overhead onto the channel.
Well, I want to get our audience into the conversation, and we're going to have 2 polling questions, and I'm going to push the first polling question out now, and it asks, which revenue streams, when considering automation, have you explored or adopted third-party software, custom software built in-house, integration or modification of existing systems, or none of these? So while we're waiting for those responses to come in. Let's give everybody a couple of minutes to weigh in on that. I do see a lot of companies starting with the build-it-yourself approach, which seems ultimately a recipe for disaster unless that happens to be your core competency. Do you think that's something that IT, usually is like pushing as a starting point?
I think so. I think I guess the temptation is control. So you can obviously control the way the platform or the tool is being developed. But in reality, you live in an environment that is your organization. And just like many companies wouldn't build an ERP system or they wouldn't build a CRM system, you're not getting the value of all the other players that are potentially adding thoughts and ideas and process into those platforms. So I would always advocate, if you can deploy a SaaS platform, you're getting the best of world-class organizations across the world rather than just what you can see in your particular area. The second thing which everyone forgets is that you have to maintain that software. Even if you deploy a tool that works very well for you, version 1 if you like, you are going to have requirements to fix and keep that software alive. It's not a static position. So you need to not only have people that are prepared to continue to maintain the software, but if you want to move it forward, and in a lot of organizations where their focus is on innovation of product, they don't typically have those sort of people sitting in the back of IT to be able to deploy that sort of platform.
Yeah, absolutely, especially on an ongoing basis. Well, let's see what the audience voted, and half the audience said that they're looking at integration or modification of existing systems. Little over a third are bringing in some third-party software. I'm happy only 10.5% are trying to build it themselves. What's your reaction to these results?
I think that speaks pretty much to what we see out there in the market. We've seen companies try in the modification of existing systems to use SAP or Oracle or one of the other platforms, or even Salesforce.com, which none of those are really built for product life cycles. They don't generally manage start and end dates and serial numbers and all the relationships between the channel partners and the product. But the temptation from a company point of view is, well, we already have a platform that does something else. Let's just modify it to suit. So I do see that quite a lot. The in-house custom software, as I said, that's one of the more common ones we see out in the field. I'm a little surprised with none of the above because, most organizations are moving into an ARR kind of mode. And then always happy to hear that people are looking at third-party SaaS applications, obviously selfishly.
Well, let's dive into the renewals topic. And I've got some data here showing that only 41% of our members are offering any sort of auto-renew capabilities. And of those companies, 85% say that less than 20% of renewals are being handled through self-service. But we've done multiple surveys of technology buyers, and we know that B2B buyers would prefer to buy and renew technology 100% online with zero involvement from a sales rep. And, something like 80% of people would prefer a fully automated renewal. So we seem to see currently that we're trying to instead of automation, we're investing in customer success management, and those budgets have been growing about 32% a year. And it's really not a problem you can hire your way out of, because as the customer base grows, there's only so many CSMs you can bring in, and ultimately for them to manually touch every customer, especially for the low touch, long tail customers, it just seems a pretty unrealistic approach to continue to do so much manually. So from your perspective, why hasn't everyone automated renewals, and why does this continue to be such a pace setter practice?
I think, well, there's obviously different types of organizations out there. If you're an organization that is direct you have no channel in front of you, and your renewals are simply maintenance type contracts, that's a very, very easy thing to automate. However, if your products are complex and the associations between products within that group are complex, and you have a channel in front of you, this is where it all starts to fall down. So we have built and we've partnered with people to get the channel involved in the automated renewal process so that the customer ultimately can renew online without any involvement of sales reps or their channel for that matter. And the breadcrumbs are left through your channel so you keep them aligned because they obviously want to keep the revenue themselves. So I think the challenge is if you think about the channel in front of you and then the end customer at the end, there is a lot of temptation for companies to jump over the channel and touch the deal direct or take the deal direct, which we've seen time and time again. But really, if you involve your channel in that process, in that automated process, and we can put merchant records at the end of all of these transactions and still remunerate your channel, you're going to keep them aligned with your business, which I think is a critical part of doing global business today. I think the other thing that we often get wrapped up in customer success. My view is customer success is ultimately about adoption and driving that customer forward. We're more about how do you keep your hands around that life cycle so that your customer success reps can help the customer move forward with adoption inside their organizations. So I see it slightly differently. I think you still need CSMs to help those customers, but you need the underlying process to make sure that the revenue is coming through.
So I think that there's clearly, a major role here for analytics, and with so much data available about customers and so much focus today on health scores, it's a little surprising that less than a third of companies are using any sort of AI or analytics to predict churn and help those CSMs focus on the most likely churn accounts. Could you talk about how, what is the role of AI in predicting likelihood of renewal or churn? And isn't that something that's really required to make the subscription revenue stream more reliable and predictable?
It is critical. So the problem with AI is you need the underlying data. If your data is rubbish in, it's rubbish out, and AI can't make reasonable predictions, right? So we've built modules that will predict closure rates for renewals across the globe next quarter, for instance. And the idea was more about flagging ones that we see at risk based on region or customer or channel partner. So I think AI is the only way to get a view of future churn so that your organization can react to where the potential issues will lie in the future. I think it's the only way. It's too hard to try and put people across that.
So we talked about renewal, and now I want to talk about expand selling and some potential there around automation. So we know that a large percentage of expand selling is happening at renewal time. That's when you're having those, big account reviews and looking at potential. And there's huge potential for growth here. This data from our customer success benchmark shows that the average expansion rate is 25%. Pacesetters are averaging 34%. But let me go to the next slide. We're seeing, again, very low adoption of predictive analytics to provide insight into what offers to extend. And, it's interesting in the consumer world, they've got this fantastic technology available that is looking at the analysis of customer behavior, other similar customers, and can pretty accurately tell you what offers to extend that are going to have the biggest likelihood of acceptance. But again, very few companies, 23%, are using any sort of predictive analytics to identify expand selling opportunities. Could you talk about how you are seeing companies automate expand selling and what is the role of AI in helping them be more effective?
So the challenge again with AI is the underlying data. So if you've got a product team that can make the associations so that AI can make decisions in an automated fashion, then it's a fairly straightforward process. In the most basic form, one of the antivirus companies, we already automatically suggest 3-year terms instead of 1-year terms to try and push that revenue forward. In the case of more complex UTM or storage manufacturers, there's other things at play where you can suggest other modules that potentially have been released in the last 12 months of that contract, or new ways of doing things with those particular UTMs, firewalls, or it could be simply a case of you have moved from a net new model to a consumption model, and you want to move the hardware from a renewal process and cost to a monthly consumption basis. You still have to have some underlying data to make those decisions. So to me, it's product management giving you, again, that rules base to be able to automate or to be able to use AI to make those decisions at the time of renewal.
It also seems that you're kind of setting the stage from the very initial conversations with sales, and TSIA talks a lot about outcome selling. And I think if you're spending the time up front understanding what their short and long-term financial goals or productivity goals or whatever it is that they're purchasing the technology for, that can also guide you, because when the contract's up for renewal, you can see how far they've come and meeting those outcomes and figure out what's the logical sequence of purchasing to help get them to that next stage. But I have some data, I don't have it at my fingertips, but less than 20% of companies are capturing any of that desired outcome information through the sales process. And so it seems like they're talking about it, but if they're not capturing it, the worst case scenario is treating every account the same, because they all have very individual needs, individual goals. They're in different industries. Are you seeing companies incorporate that kind of outcome-based approach to have a more substantial conversation about where to go next?
I do. I see it not only in the sales area, but I see companies starting to understand that all of the touch points with the customer service type people are potential sellers in this world of ARR, rather than just relying on your sales team to do this. So the more data that you've got coming in, and although you have different customers out there in the field, the underlying product data doesn't typically change significantly. So it's a matter of analysing that data on the fly on the basis that you have it coming in, and then applying it to a different segment or a different customer individually, if you can, to make those upgrade or expand type decisions.
Well, let's get to our second polling question for the audience, and this is asking which revenue streams could be better managed within your business. Renewals and recurring revenue, expansion, upsell, cross-sell, net new sales, or all of the above. So where do you see your biggest opportunity to improve? And I'm guessing that a lot of this is going to depend on whether our audience is customer success or sales or the renewals team within sales. Do you see people understand the challenges they have, or is it going to take some economic pressure for them to maybe come to terms with some of the challenges that they're facing?
I've always been one of those people that sees opportunity in crisis. So if companies are, what we call fat and happy and everything's kind of okay, they won't look to change. With the current economic pressures coming out, whether we're in recession or not technically, that are facing companies to look at what they're doing or how they're doing it, this is the opportunity for business people inside the companies to actually drive some change. Because before it was, I speak to people every day on the business side of the business, and they are absolutely aware of the problems. They've got customers that are in all sorts of trouble. I had even a service provider the other day who's dealing with governmental departments, and their renewal rate is terrible, but they can't sort of get through the IT wall. So with all of the changes that are going on with inflationary pressures, with even finding decent staff, there's a lot of underemployment at the moment. that you could now drive that conversation about change and to change those underlying mechanisms inside the business. So I think it's a great opportunity right now.
Well, let's see what the audience says is their biggest challenge. 34% said all of the above. The second top answer was expansion, 32%, 22% on renewals, 12% net new sales. So it does seem that there is an understanding that we've got to up our game on every level.
I think I'm surprised that it's not more all of the above, but I suspect that the net new sales piece is all about automation and getting those quotes out the door easily and making sure the fries and the Coke are with every single quote. The expansion piece is always about, well, I don't have my install base data in a format that I can actually throw AI at to go and generate the quotes or the proposals. And recurring revenue will all be about automation, and particularly if there's any channel partners on this call, if you're making 6% or less margin out of renewals, if you've got people actually still dealing with them physically, then you're losing money because of the cost of those people to be able to deal with those issues.
Yeah. Well, you've mentioned channel a couple of times, and before we finish, I wanted to talk about enabling your channel partners or distributors, which I know is another core competency of iasset. And according to our channel optimization benchmark, an average of 36% of SaaS revenue is sold by channel partners, but for some companies, they're averaging over 80%. How are you seeing OEMs extend their internal automation to their channel partners? And are you seeing OEMs taking more responsibility to ensure the success of their partners?
I am seeing a general move to that. So if when we talk about these sort of contracts, we talk in terms of subscription, which are usually fixed term contracts, and consumption, which are a pure cloud where the income can change literally on a monthly basis. So we've done a lot of work with US manufacturers that have both types of systems. We've done points-based systems where the manufacturers have handed out points often to large end-user customers who can consume them through their channel, which of course keeps the channel aligned. I've seen a lot of manufacturers offer support to the channel partners on their migration from, again, because if you think of the manufacturers are dealing with the net new $1 million deals down to potentially tens of thousands of recurring revenue, the channel partners have got a bigger problem because they don't have the margins typically that the manufacturers have. So they have to go through this pain with a lot less margin to fund that pain. So I've seen some of the manufacturers actually get quite involved in their channel partners' journey to that cloud side of the business. So yes, I think ultimately, if you have a channel in front of you, you want to get those guys engaged with you, guys and girls engaged with you early in the process so that it's not a shock to their business, because we have seen channel partners fall by the wayside because of the nature of the change to ARR.
Mm-hmm. Well, I agree with you. We are seeing companies not only investing more in channel enablement, but really trying to understand how they can continually grow the business through the channel. But for companies who really aren't focused on selling through channels or have channels and they're not doing much to automate them, it seems with the potential recession, coming, that companies are going to be forced to take this seriously and do everything they can to build a dynamic channel just to continually grow revenue and find new sources for revenue. Do you see a lot of incremental revenue potential by building and automating a channel partner ecosystem?
I do, and I think you've touched on a couple of points there, John, but if you think about where you want to get to if you're going to deal with a channel is be channel-led, not a manufacturer with a channel. So channel-led genuinely engages with their ecosystem to help lift the entire ecosystem, not just the manufacturer. Mm-hmm. And that can be difficult in some scenarios. But why do you actually have a channel? You have a channel because you're trying to keep your costs down to deliver sales out there across the globe without having to put all of the people behind it on every level. So, my counsel is always to be empathetic, to try and get yourself into their mindset and what they have to deal with. Quite often we see channel partners that are in all sorts of trouble because the manufacturers have updated their go-to-market, and they've put more onus on the channel partner to deliver manual labour effectively where the manufacturers pushed it out. I would always counsel that you look at how you automate their business as well alongside yours, because truly then you'll end up with an ecosystem and be leaps and bounds ahead of other organisations that are in similar positions.
So I know we've got a lot of questions in queue, which is not a surprise with this topic. But before we go to Q&A, how can TSIA members learn more about iasset?
Look, the easiest way, John, obviously, is to go to the website if they'd like to dig into some of the success stories. I've put my details up, and I can put you on to whoever the appropriate person is within the region that you're in. So please reach out to me. I'm on LinkedIn, obviously, as well. But that's the easiest way for us to get to you and show you what we've done with others. You know, there's some fantastic success stories out there. We've had companies find $100 million worth of opportunities they'd never seen before simply through the first step of automation. We've had people take, my favorite one is 400 odd renewal reps down to 125 and tripled the business. So there's lots of great success stories that you can bounce off over the last 14 years of out there doing this every day.
Well, Vanessa, I see that we do have quite a few questions coming in from the audience, so let me turn it over to you.
Perfect. Thanks so much, Sean. And before we get started, just a quick reminder for everybody, if you would like to submit a question for John or Scott, please enter it in the Ask a Question box in the top left corner of the webinar player, and we'll get through as many questions as time allows. The first question says, it was mentioned that it wasn't recommended to build your own platform in-house. Can you please expand on why that would not be the best case scenario?
Well, I think, as I alluded to earlier, from my point of view, the biggest problem is you're not going to innovate at a global level because you are surrounded by your view of the world. You're not going to be able to leverage off what other people have done before you in different markets. So you're not going to get that sort of innovation that's outside of your own view. The second thing is you have to have an IT team or a software team that's sitting inside your IT team that's dedicated to that platform 24/7, because as with all software, it needs to be kept alive. And the last part, which a lot of companies don't factor into cost, is the maintenance part of it. You know, in the old days of perpetual software, it used to be roughly 17% per annum you would pay on top to keep the software alive. So I would counsel that's not your core competency at the manufacturer. Your core competency is to build great technology in what you play in, but your operational systems, you don't normally build an ERP or a CRM. So I don't think in a product lifecycle or install base side of the business, that's a smart way to go either.
Okay, our next question asks, why don't more companies include auto-renew clauses in their terms and conditions? We do, and therefore don't require any effort or paperwork upon renewal, just the initial executed contract, and away we go until the client cancels. What would be the benefit of requiring a renewal, even if it is automated through technology?
I think that is nirvana, being able to put them in an auto-renew type mode. The challenges you face are if you put a channel in front of that. One manufacturer did some research on their renewals process, and there was up to 22 phone calls going between the end user, the reseller or the VAR, and the distributor. So it's not as simple as that, and quite often there are changes. If you're in storage game and they've added more disks, that changes the contract. So it depends on the level of complexity. If you're just a straight AV type company, or they're just straight maintenance contracts, and you don't have any of your channel partners in front of you, then that is absolutely nirvana, and that is the right way to go. I would counsel that every time.
Okay, our next question says, Data quality is often a barrier to automation. How do you ensure that customer data such as primary contact, entitlement, asset details are accurate and maintained?
So, point of sale is always going to be a problem. You'll have reseller partner or channel partners that provide, say, a company A, they'll call it Company A Inc. So you'll get this data mismatch already because different channel partners might refer to it in different ways. We simply, inside the manufacturer and in broader industries, have indexes that tie those together so that once we've analysed that incoming company record, for instance, then we attach that to all the different versions of that particular company so that you have this wrap up into one effectively container for that organisation. But that is absolutely a challenge out there in the space. I think in data quality terms, you have to dictate to your distributors or channel partners what the format of the data is, because you can ingest that very quickly. And of course, Nirvana is that they're channel partners that are already running iasset.com, and if you are running one of our platforms, then they hook together and you don't have that data mismatch because they're both running on the same or similar data sets.
Okay. The next person says, can you share one of your best customer success stories? What sort of outcomes did they have after automating?
Well, I think those two I alluded to earlier, where there was, over $100 million worth of revenue that they'd never seen before. But my favorite is the great thing about this platform, and it's one of the first businesses I built where you get the benefit of both, which is cost saving through automation, as well as revenue increasing through expand, extend, and lifecycle campaigns. Not a lot of people, as I said, are dealing effectively, through channels for end-of-life process. And the end-of-life process might be you're moving from perpetual or hardware-based sales to consumption or subscription. So that is an end-of-life event. You need to be able to automate that piece as well. So I would advocate that underlying platform will take out all of the pain that is related to those expand and extend revenue opportunities out there in the field. If you look at some of the consumption manufacturers, SAP can't handle $0 orders at this particular organisation, but they sell the box for $1 and then it's all charged on consumption. So we sit between ERP and their license management system to make sure all of the players get billed correctly. So there's all sorts of different ways you can expand your revenue opportunities in there.
So actually, kind of to piggyback on what you just said there, Scott, I have a question from Kevin. It'll be our last question today, but it says, how does your platform differ or complement from a CSM tool?
So the Gainsight tool is very much a direct sales piece, and we do talk to Gainsight on a regular basis. Ours effectively is not about adoption per se, which is CSM is more about adoption of product and helping customers use more of your product. Ours is, what is it, where is it, when's the trigger dates for start and end of contracts, how much have they consumed, or how many points have they burnt for that particular consumption contract. So we're underpinning, if you've got a channel, the entire channel piece, and if you don't have a channel, it's really about the install-based management piece and making sure you've got your arms around all of that history and that data richness that sits out there in the field, which most customers don't have. So we tend to go deeper at an operational process level than Gainsight. Gainsight's more about customer success, whereas we're more about that underpinning that install-based management piece.
Okay, well, thank you, Scott. We have unfortunately come to the conclusion of today's webinar. However, I know there are quite a few questions still in queue that we haven't answered yet. Don't worry, we haven't forgotten about you. We will make sure to follow up with you personally. With that being said, a few quick reminders before we sign off for today. There will be an exit survey at the end of today's live webinar. Please take a few minutes to provide your feedback on the content and your experience by filling out that brief survey. And a link to the recorded version of today's webinar will be sent out within the next 24 hours. I'd now like to take this time to thank our presenters, John and Scott, for delivering an outstanding session. And thank you to everyone for taking the time out of your busy schedules to join us for today's live webinar, The Winning Formula to Protect and Grow Annual Recurring Revenue, brought to you by Technology and Services Industry Association and sponsored by iasset.com. We look forward to seeing you at our next TSIA webinar. Take care, everyone.